Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I trust you all had a wonderful weekend out there. Well, for me, it was a short one, and though I'm very glad to be with you here this morning as we will be having another fresh new look at the financial market. So happy new week to everyone in the house. Well, before we kickstart the session, let's run through our daily routine just to quickly confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi, hello, whatever it is, and let me get some feedback from you guys. And if you finding difficulties in hearing and seeing my screen, please let me know as well, and I'll do the necessary adjustment to make us have a better experience out here today. Thank you very much, guys, as I look forward to your comments and feedbacks. All right. So let's see what we have here. I'm still trying to load up my comment box. Okay, I can see a couple of comments, a handful, I think, from Joko Chan, Destiny One. Good morning to you. Hadrian, good morning to you. Hello, Carrie. Good morning. Trust you had a wonderful holiday. We have Lao Hack 9 times. Good morning. PK78, good morning to you. Thank you very much. So I'll take this as a positive confirmation that we are all good to go this morning. And it's on this note I welcome you all to another promising edition on the Extreme Speed Live, your daily dose of financial insights and trading strategies. It's another new week, and in fact it's another opportunity for you to submit in the comment section any assets you want us to look at for this week, be it cryptocurrencies, options, commodities, currency assets. Feel free to let me know in the comment section what assets you want us to look at for this week, and trust me, I will be incorporating it into our plans for this week. However, from my own hand, I have a bunch of assets I want to share with you today. In fact, I have very simple trading setups to guide our trading decisions for today. So I encourage you not to miss out. Stay tuned in so you don't miss out on any of the valuable ideas we will be talking about today. And also, we want to also take into consideration the fact that um, the US session is going to be witnessing a public holiday today, so they are looking forward to the US president's holiday, I think. So the financial markets is likely going to witness some subdued trading activities, and of course we are going to be taking this into consideration while we review the current market structure. For those of you joining us for the first time, I'm excited to have you around with us this morning and trust you had a wonderful weekend. And I know you will be wondering what this is all about. Well, to simply put, as technical traders, we usually gather here every day, coming together as a community to engage in follow-ups and reviews of our current trading positions in preparation of the New York session. The session officially kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in so you don't miss out on the insights that we will be deliberating on today. My aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us in this community, the better you will become at comprehending our analytical approach and eventually be able to use the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. And before we kickstart the session, I noticed some couple of comments. I note some strange comments in the comment section. Please be cautious of individuals sharing contact details in the comment section, offering financial advice. Xtrend Speed does not endorse or take responsibility for any advice given by these individuals. So stay conscious. Your financial safety is a priority, so please refrain from engaging with unsolicited contacts in the comment section. And please remember, always conduct your thorough research and seek advice from trusted sources before making any financial decisions. So with that being said, here we will be diving right into the business for today. And the first thing we usually do on a daily basis is to keep tabs with the fundamental factors that will be influencing the market sentiment today. And for those of you who have been with me for a while, you know how important these fundamental factors are, as they usually manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and better timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets I have for us for this week, we shall be focusing on the economic features from both the United States and the Japanese economic docket. Now, for today, Monday, February 19th, I guess, am I right? Yes, 19th. We do not have any high impactful event, and in fact I went further to include the mid-tier economic features, but unfortunately we do not have anything to as well, so we shall be relying on our technical skills to guide our trading decisions for today. Then there's one thing, I don't know what happened, this economic calendar is not showing it. We had the Japan's machinery order, which was released earlier today, but it's not on my economic calendar here. I don't know why that is, but the figure came in positive, as we saw. It exceeded all expectations, rising by 2.7% in January compared to the anticipated 2.5%, signaling enhanced confidence within the Japanese manufacturing sector. So we are going to be looking at the USDJPY in a moment to see how market participants had reacted to that event. And of course, remember that we're also going to be considering the fact that today is a public holiday in the United States too as well. So with that being said, here we will be diving right into the business, and as usual, the first asset we will be looking at today is going to be the US All Spot. And last week on the US All Spot, we had a tremendously profitable week. Remember, we were buying this asset throughout the course of last week, and not until the early part of Friday we saw some traction come in, and following the US retail sales data, which came in below expectation, we saw a renewed demand in oil prices, which of course we took advantage of, rather than the momentum all the way into the $78.40 area as at the last trading day of last week. And congratulations to everyone who did capitalize on that opportunity. Oil prices, which had initially climbed higher on the back of that weaker than expected US retail sales data, appear to have been going through a retracement phase, retracing some of its gains as the new week began, possibly driven by a technical correction amidst subdued trading activities due to the President's Day holiday in the United States. Now, as it is right now, market participants will be focusing on monitoring demand conditions in China, especially post the week-long holiday in the Chinese economy. So we want to see China, after coming back from this long holiday, how are they going to be reacting, how are they going to be participating in the oil market in the new week. Now, amidst expectations of the Federal Reserve maintaining its current interest rate, recent data complexities have led to challenges for crude oil prices. Now, the combination of higher consumer prices and declining retail sales has bolstered sentiment that the Fed will refrain from rate cuts in both March and May. And according to the CME Fed Watch tool, which I usually check every morning, there is approximately a 52% probability of a 25 basis point rate cut in the month of June. Now, another factor that we are also going to be taking into consideration is the geopolitical tension in the Middle East following an Israeli military raid on Gaza's second largest hospital, leading to its cessation of functioning during the course of the weekend. Now, as it is right now, we also talked about some other reports last week from the IEA and of course the OPEC Plus monthly reports. And to give a quick recap of what we talked about, we saw how the International Energy Agency downwardly revised its global oil demand growth forecast for 2024, and this slowdown is partly attributed to development in China. Now, we also saw the OPEC Plus report where they projected an increase in demand for oil in 2024 and 2025. In fact, these are conflicting data, and we can see the political play in this whole scenario. Obviously, we do know how the OPEC Plus are trying to artificially increase the price of oil due to various factors, one of which is the production cuts they've introduced and told their members to adhere to. And that is why I'm not holding their reports with a lot of trust at this point in time. However, we will take that into consideration while we review the current structure. Now, how has the market participant reacted to this event, looking at things from a technical standpoint? So to start with, our first point of contact will be on the daily time frame, where I was able to take into consideration the nature of price action since the month of July of last year. And taking this into consideration, I was able to identify a key level at the $78.50 area, and in fact you will see how this level had played a major role in determining the direction of price action throughout the course of the last 6 months or so. I hope I'm correct. Between July to this moment, it's about 6 to 7 months, I guess. And looking at the structure closely, you will see how this area around here was more of a demand zone, as you will see in the month of August. Throughout the month of August, it was more of a demand zone before price action broke down the structure in the month of November. And since the breakdown happened in the month of November, this area had continued to be a strong selling niche in this particular market. And look at what happened at the end of the month of January and last week's trading session. Despite the strong bullish momentum we captured, we saw that as soon as price got into the $78.50 level, we begin to notice selling pressure resume from that area. And from the look of things, you would agree with me that we are at a crucial juncture in this market. And in fact, if we consider what has been happening in the last 3 to 4 months, you would agree with me that the $78.50 level had been a strong selling niche in this market. Now, in addition to this key level is this interesting situation we saw here at the beginning of the month of December of last year. Now, despite the strong bearish momentum, we did notice that as soon as price got into that area around the $68-67 zone, we begin to see price action found by pressure, hereby negating all attempt by the sellers to break through that area. And this continued into the new year, giving us series of higher lows to work with. And if we connect the series of higher lows, we have a beautiful ascending trend line to work with, hereby giving us a situation where market price action is gradually gaining bullish momentum behind the scenes, and of course transitioning into what may look like a reversal pattern where the key level at the $78.50 area could be serving as the neckline of the structure, and of course the breakout of the structure will validate the potency of this reversal pattern. Now, with this information gathered here, scaling down into the 4 hours time frame, we were able to identify a simple trading setup for this week. Now, looking at this structure, taking into consideration the nature of price action since the beginning of this month of February, it is quite obvious that the market has been finding a series of higher lows, further emphasizing the strength of the buyers in this market. And when we connected a series of higher lows since the beginning of this month, price action had consistently respected that ascending trend line. Now, like I said, on the daily time frame, we are back into a structure here where the $78.50 level had been a strong selling niche since the month of November of last year. Now, the question as we head into the new week is, will price action break out of the $78.50 level to incite an uptrend situation, or are we likely going to see price action break down the ascending trend line to incite a sell-off this week? So you will see that we are at a crucial juncture where price is currently trading within both the ascending trend line and that key level at the $78.50 area. So depending on how price reacts to this structure will determine what our next line of action will be. So what we are going to be doing now is to scale down into the lower time frame, that is the 1 hour time frame, where we are going to be having an idea into how market participants have been reacting to the structure since the new week began. Now, scaling down into the 1 hour time frame, we will begin to see things more clearly. And in fact, since the new week began, you will see that price action had been confined within the $78 area and of course the $77.60 level to emphasize the prevailing uncertainty in this market during the first 10 hours or so. Of course, you know how we do it in this community. Whenever we have a range like this, we usually exercise patience and wait for price action to either break out of the resistance line of the range to give us an opportunity to buy, or the breakdown of the range to give us an opportunity to sell. Now, with the way things are going right now, and considering the fact that price action still remains above the ascending trend line we spotted on the higher time frame, which of course you can still see here on the 1 hour time frame, we shall continue to maintain a bullish bias where we shall be looking out for buying opportunities at the breakout of the $78 area. So this simply means that we will have the privilege of joining a bullish momentum even before the breakout of that potential neckline and key level we identified on the daily time frame, at the $78.50 area. So this is how we are going to be managing a bullish expectation on this particular asset. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. Now, in as much as we are looking out for buying opportunities, you know how we do it in this community, we also want to keep tabs with the potentials the sellers also have in this particular market, and what are the things we want to see on this chart that will make us change our bias from bullish to bearish. Well, first of all, we acknowledge the fact that the $78.50 area had been a strong selling niche in this market. I think between the $78 and $78.50 area had been a strong selling niche, and of course we've seen how in the last 3 to 4 months it has been difficult for buyers to break through this particular structure. Now, if the continued selling pressure persists below the $78.50 area, a breakdown of the support line here of this range, as you will see, it beautifully shares a confluence with that ascending trend line we projected earlier. Now, if price can break down both the ascending trend line and that support line, we will have no other choice than to join a bearish move. And in fact, the breakdown of the ascending trend line would be the first time price will be breaking down this structure this month, hereby inciting a strong bearish move to the downside. Now, there is one thing I would like to call our attention to here. Now, if price breaks down the support line here, we will not be selling right away because price still remains above the ascending trend line. And of course, you know how we treat our ascending trend lines in this community. As long as price remains above the ascending trend line, we have no business selling this asset. Now, due to the expected subdued trading activity today, due to the observation of a public holiday in the United States, we may see price action go through an extended consolidation phase before it finally gains some traction. And this may result, if price will truly be going to the downside, this may result in a little bit of consolidation phase around here before price breaks down both of the ascending trend line and that key level to incite a downtrend move. Please, let's take note of this one. The breakdown of both the ascending trend line and that support line at the $77.60 level is all we need to join a bearish move to the downside. So let's keep this in mind while we continue to monitor price action. However, if price does not break down and comes back into this area and we begin to see reversal patterns around this area, let's mark out the neckline of the reversal pattern and then buy the breakout retest of the neckline. Then we can maximize the potential move by adding more positions at the breakout of the $78 area and of course the breakout of the $78.50 area at this point. So you can see how crucial this juncture is for us, as it's going to be playing a major role in determining the direction of price action today. So I encourage us all to mark out this range between the $78 area and the $77.60 area, where depending on the direction of the breakout will determine where price will be going, at least for the first half of this week. So I hope I made myself clear on the US All Spots for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next financial asset on our watch list. And you can also take that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. Stay tuned in. All right. I can see a couple of comments here, and I can see an epistle from Steamroller. Good morning, Steamroller. Glad to have you around with us this morning. So Destiny says that gold sell. Today I want to open some positions on gold. Can you suggest something to me? Please be a little precise. Of course, sure. We are going to be attending to the gold. Gold is my favorite asset, of course, and I will definitely touch on gold. Stay tuned in. Towards the end of the session, I will be talking on gold. Okay, Destiny 1. I can see Murphy G. Murphy G, good morning to you. Glad to have you around with us. I see you, my friend Leonardo DV. Glad to have you around with us this morning. And Murdoch, how are you, Murdoch? Trust you're doing very well. Hello, Steamroller. I see your comment here. You said you're having the best time in Australia, making some steady profits on XAUUSD and USOILSPOT. That's wonderful. I'm very excited about this. And you said if it's possible for me to incorporate either of those this week, and it will be good. But no problem. Okay, it's okay. Well, I usually take the XAUUSD, which is one. So what I usually do during the extreme speed live technical analysis session is to try and touch, because of the limited time I have, I want to touch all the possible fields that majority in the community will be looking at, like the currency asset, the commodity market, and of course the equity market too as well, and then the US or the energy market too as well. So that is why I have one asset each for every of this sector, so as it will cover a lot of options in my viewers here on this platform. But unfortunately, due to the time, I would have loved to take on the XAUUSD, but due to the limited time, and if I could do quick, I'm not sure I will be able to beat the time on this one. But let's see how things will play out. Thank you very much for the suggestion, Steamroller. I'm glad to hear that from you. Okay, Steamroller already answered Destiny 1. Okay, Pizza Trend, good morning to you. Glad to have you around with us this morning. Glad to hear from you, Steamroller. Thanks for the feedback. I really appreciate that. All right, so in the absence of no questions, I want to assume that we are all on the same page here, and in that regard, we shall be moving right into the next asset on our watch list. Stay tuned in. So the next asset on our watch list for today is the USTech100. Remember last week we had a phenomenal run. We had both buying opportunities, and of course we also sold during the later part of the week, scooping some significant amount of profit in both instances. And remember what I said here last week as regards to this particular asset, that the fact that we are at an all-time high, it is expected that we will be seeing some choppy market conditions, retracement moves, and of course consolidation phases due to the uncertainty that this kind of environment comes with. Usually when price action finds a new high, it usually takes some time before market participants acclimatize to this price zone, and out of fear of the possibilities of price could crash, a lot of market participants who had captured the bullish momentum always tend to take some profit off the chart, reflecting on the chart as this old choppy retracement and consolidation phase we usually see around this area. Now, we were taking all this into consideration last week while we were making the decisions, and of course, thank goodness, we were able to make some profit off our analysis. Now, going into the new week and considering the fact that today is a public holiday in the United States, it is very likely that we see subdued trading activities on this particular asset today. And as a result of this, we may expect some accumulations of positions ahead of the opening of tomorrow, which could bring in some huge traction in either the bullish or bearish perspective. So we are going to be analyzing this today, irrespective of the public holiday, and position ourselves ahead of tomorrow's Asian session and New York session to capture that big move that happens. So the first thing we are going to be doing here is to look at the daily time frame so we can have an holistic perspective into what is going on in this market. And right here on the daily time frame, and after considering the nature of price action since October of last year, you will see that price action has been very, very bullish. And after connecting the series of higher lows in this market, you will see that we have an ascending trend line to work with. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we have no business selling this particular asset. However, if price action breaks down the ascending trend line, we may start considering selling the asset. Now, zooming into the current structure to take a look at what has been going on in the last couple of weeks, let me say 3 to 4 weeks, I guess, you will see that price action has been consolidating right within the 18,050, that's an all-time high, and the $17,650 area. And in fact, due to the way the $17,650 price level had determined the direction of price action since the since the later part of the month of January, I was able to make the $17,650 as our key level for this week. And you know how we use our key levels in this community. When price remains above the key level, we'll continue to look out for patterns and structures that supports the idea of buying the asset. However, if price action breaks down the key level, then we want to be considering selling opportunities. Now, look at how interestingly the key level and the ascending trend line shared a beautiful confluence. Now, the question going into the new week is, will the continued selling pressure around the $18,050 area? As you will see, we have the lower high here, which further reveals that sellers are gradually gaining momentum, and in fact we could see the possibility of a reversal pattern evolve around this area in the form of a double top structure, where the neckline of this reversal pattern will be sharing a beautiful confluence with our key level at the 17,650. Now, if price will break down both the key level and the ascending trend line, we will have no other choice than to join a bearish momentum to the downside. However, if buy pressure persists above the key level and we continue to see patterns and structure that supports the idea of buying, we may want to buy here and of course maximize the bullish move by adding more positions at the breakout of the $18,050 area. Now, this is a long-term perspective view here. So what we want to do today and for this week is to see how the market participant is going to be reacting to this key level this week to decide what our next line of action will be. How we're going to see a reversal setup here where the key level will serve as a neckline, and of course the breakdown we affirm and validate the potency of that reversal pattern, or will the key level become a new platform for buying opportunities this week. Stay tuned in as I have a level at the 4 hours time frame we will be using to guide our decisions going forward. Now, as it is right now, okay, nothing really changed here on the 4 hours time frame. We still have our ascending trend line in place, price still trading above both the ascending trend line and the key level at the 17,650, hereby supporting the idea of buying. But what we want to be doing now is to scale down into the 1 hour time frame, where we shall be seeing how market participants have been reacting to the structure since the new week began. Now, right here on the 1 hour time frame, we will begin to see things more clearly. So let me just zoom things in a little bit so we can see things more clearly. So that's our key level right there at the 17,650, and of course we have the ascending trend line in place, which is still showing here on the 1 hour time frame. Now, with the structure we have here, looking at what what is going on here. You will see that the week started on a bullish note. Price started at around the $17,670 area, bringing price into the 17,745 level before bearish momentum came in here, giving us a situation where price is currently confined within a range between the 17,745 level and the $17,670 area to emphasize the prevailing uncertainty going on in this particular market. And of course, you know how we use this kind of ranges. Whenever we identify them on our chart, we do exercise patience, waiting for a signal in the form of either the breakout of the resistant line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. However, considering two factors here, one of them is the fact that the week started on a bullish note, as you saw this engulfing bullish candle from here, and secondly, the fact that price remains above the ascending trend line, and thirdly, price remains above our key level at the 17,650. And technically, all these factors here support the idea of buying this asset. So with this information, we shall be having a buy stop order above this resistant line at a 17,745 level to capitalize on an uptrend move. And if we are buying around that area, please let's ensure we have our stop losses in place anywhere around the 17,680 and the 17,670 looks promising to place all stop losses too, while we give enough breathing space for price action to move around. So we shall be having a stop loss ranging between 45 to 65 pips in that regard on this one. So this is how we are going to be buying this asset today, only if the 17,745 level is broken to the upside. However, in as much as we're looking out for buying opportunities, you know how we do it in this community. We want to keep our options as open as possible so that we can be on standby to capitalize on whatever direction the market is going to be going today. Now, looking at this, we have the support line right here at the 17,670. Why do I keep saying 16,000? 17,670 area, which interestingly shares a confluence with that ascending trend line. And just like the structure I made mention on the US All Spot, we will not be selling unless both of the structures are broken to the downside, like a breakdown retest of structure, then a further additional sell position at the breakdown of the 17,650 to maximize the bearish momentum to the downside. So on this particular asset, we are not selling unless both the ascending trend line and that support line of the range at the $17,670 level is broken to the downside. So I encourage us all to mark out these levels and trend lines on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So it's a simple setup we have here, as our center of focus basically is between the 17,745 and the 17,670, where depending on the direction of breakout will give us a signal of where price will be going. So I hope I made myself clear here, but if you have any questions or need some further clarifications, feel free to let me know in the comment section. So as always, I will take the next 5 to 10 seconds off to see if there are any questions before we move on to the next asset on our watch list, and use that time as well to mark out these levels on your chart. All right, Roro Zoom, good morning. Freedom Me Picks, good morning to you. Glad to have you around. I can see from Try to Beat Me, C, and Nizan, good morning to you all. And I'm excited to have you around with us this morning. So, in the absence of no questions, I'll take this as a confirmation that we are all good to go this morning. I see you, RPS 30 FX, good morning to you. Trust you're doing very well. All right, so in the absence of no questions, let's run through this next asset on our watch list for today. So the next asset we are looking at today is the USDJPY, and last week we also had some interesting situations too on this particular asset, but the new week, as we saw how the USDJPY faced continued selling pressure throughout the Asian session, and of course a general weakness in the US dollar in recent times, coupled with positive Japanese machinery order data and statement from the Japan's finance minister, posed challenges for the pair amidst unexpected thin trading conditions due to the holiday period in the United States. We learned the report from the Japanese economy, that is the Japan's machinery order, exceeded market expectations. I did mention this earlier. It rose by 2.7% in January compared to the anticipated 2.5%, hereby signaling an enhanced confidence within the Japan's manufacturing sector. Adding to the mix is the Japanese finance minister, Suzuki, has remarked in an interview recently, stating, and I quote here, I quote his words, he said the Bank of Japan holds jurisdiction over monetary policy, but there will be a phase when interest rate goes up. Now, this for me is a positive signal for the buyers of safe haven Japanese yen at this point, and I think this remark, coupled with the positive economic data from the Japanese this morning, is responsible for the current bearish momentum we're seeing on this particular asset. Now, at the National Association for Business Economic Conference, the former Federal Reserve official James Bullard suggested that the Federal Reserve should consider lowering interest rate at its March meeting to prevent stifling economic activity amidst rising rates. Now, this proposition comes amidst observation of a resilient U.S. economy, as evidenced by the previous week's economic indicator from the United States. Now, this comment from the former Federal Reserve official has thrown in some indecisive situation into this market right now, and this may likely be a sign that the Federal Reserve may be considering interest rate cuts as early as the month of March, especially after the retail sales data came in below expectations on Friday. Now, with all these various factors we've talked about here, how do we intend to capitalize on the next move? Well, we want to understand how the market participants are behaving in this current financial landscape. Now, to do this, we want to have an holistic perspective into what is going on in this market. So our first point of contact is going to be on the daily time frame, and right here on the daily time frame, what I did was to take into consideration the nature of price action since mid-December of last year, and it is very obvious that price action has been bullish, and in fact I have a couple of ascending trend line after connecting the series of higher lows, but the major one we will be using is the one closest to the price action activity in recent time, and this is it right here. Now, in addition to this ascending trend line is our key level, which is situated at the 150.800 area, and in fact you will see how this zone had been a strong selling niche since last year October. Look at what happened around this area. As soon as price got here, we saw some selling pressure resume. We saw the same thing happen in the month of October. The price broke out of this structure at the beginning of the month of November, but immediately we saw price drop again to the downside. The same thing happened during the mid of November, and price dropped again. And during the course of last week's trading session, despite the strong bullish momentum, as soon as price got into the 150.800 zone again, we saw another selling pressure resume from that particular area. And what this simply tells us is that sellers are still very strong around that area, and unless price breaks out of the structure, we'll continue to keep the options of selling the USDJPY open. Now, scaling further to the downside to the 4 hours time frame, I was able to identify a trading setup that we will be using to guide our decisions. Now, on the 4 hours time frame, what I did on the 4 hours time frame was to consider how price action has been behaving since the beginning of this month of February, and it's quite clear that the market has been bullish. And after connecting the series of higher lows, we have an ascending trend line to work with. And you know how we use our ascending trend lines in this community. As long as price remains above this ascending trend line, we have no business selling this asset. Now, zooming into this current structure, you will see that in the last couple of weeks, last 1 week, I think, price action has been range bound, confined within the 150.800 and the 159.600 area to emphasize the prevailing uncertainty in this market. And usually when we have a range like this, we want to exercise patience and wait for price action to either break out of the resistance line for an opportunity to buy, or the breakdown of the support line for an opportunity to sell. Now, looking at what happened here since last week, Tuesday, we saw that selling pressure has resumed after price action tested that high at the 150.800, and leading into price action finding lower highs in this market, revealing the strength of sellers at this point. Now, will the various factors supporting pivoting from the current ultra loose monetary policy be a major reason why prices drop into the downside? Well, we never can tell, but we can use the structures to guide our decisions going forward. Now, as it is right now, the continued selling pressure, the series of lower highs, has led to the breakdown of this ascending trend line here, which shares a confluence with the 150.100 level. Now, the question here is this breakdown a true breakdown or a false one? Now, that is where patience is required at this point. Now, if you look at the structure here, despite the breakdown of this ascending trend line and the 150.100 area, you will see that sellers are still struggling to continue the momentum. In the last 16 hours or so, we have been seeing buy pressure around this area, further emphasizing that buyers are still present around this point. So what we are going to be doing now is to scale down into the 1 hour time frame, where we will be able to see how market participants have been reacting to the structure since the new week began. Now, on the 1 hour time frame, you'll begin to see things more clearly. So what I did here was to try and see how market participants have been behaving since the new week began. Now, right here, you will see that the week began on a bearish note. As you will see, price started at around the 150.285 and dropped massively breaking down both the ascending trend line and the 150.100. Now, despite the strong bearish momentum here, as soon as price got into the 149.875, we have been noticing buy pressure around that area, revealing that sellers are finding it difficult to continue the momentum that started this week. And as a result of this, we have a range to work with that is between the 150.285 and the 149.875 is where price action has been trading since the new week began. Now the question here is, will price break down the support line here to incite selling opportunities, where the further breakdown of the 159.600 will welcome more selling opportunities? Or are we going to see a situation where the breakdown of this ascending trend line will turn out to be a false breakdown, where the price climbing back above the ascending trend line, breaking out of that resistance line, will welcome buying opportunities? Now, presently, due to the current situation, I have a sell stop order below the 149.875 to capitalize on the bearish move, and of course a buy stop order above the 150.825 to join an uptrend situation. However, we need to also understand what is going on within the range. Is this old pattern here projecting a situation where price will continue downside or to the upside? Now, from a technical standpoint, if we consider the breakdown of this ascending trend line, we usually expect that price may come back to retest any of the structure, maybe the ascending trend line or the 150.100, where it may incite the downtrend continuation. So I would like us to take this into consideration too as well. Now, if this happens, let's see if the market will find selling pressure around the ascending trend line or the 150.100 to join a downward move. So let's be very mindful, and please also note that we may likely see subdued trading activity due to the public holiday today, and in fact throughout the day we might see price just consolidate within the 150.100 and the 149.875 ahead of the Asian session before a traction comes in, maybe in the form of a breakdown to incite selling opportunities or breakout to incite buying opportunities. So pending the time that happens, let's continue to monitor price action within this range and let's see how it's going to play out. So if this range here we see higher lows around here, then we might want to be buying the breakout and retest of the 150.100 to join an uptrend move, and a further breakout of the 150.285 will welcome more buying opportunities. But if price breaks down the 149.875, we have no other choice than to start selling the USDJPY. So this is my simple view on this particular asset. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 5 seconds, we are running out of time already, and see if there are any questions before we move on to the final asset on our watch list for today. Alright, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard we shall be moving on to the next asset on our watch list. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD. And you can see gold price starts the new week on a strong note, building on last week's recovery during the Asian session this morning. And of course, recent US economic data indicates persistent inflation, leading markets to reconsider expectations of a June interest rate cut by the Federal Reserve. Now, this delay in rate cuts could impact safe haven assets such as gold negatively, as higher interest rates typically reduce their appeal for safe haven assets compared to higher yielding investments. Moreover, we cannot ignore the possibility that the escalating geopolitical tensions in the Middle East may further enhance the appeal for gold as a safe haven asset. Now, looking ahead, the upcoming People's Bank of China's interest rate decision tomorrow and the release of the FOMC minutes on Wednesday will undoubtedly shape the market dynamics. Now, therefore, we will want to mark out our levels appropriately on the chart using the historical data we have, so that we can strategically position ourselves for the next move as market participants anticipate this major event. And to do this, our first point of contact will be on the daily time frame. Is it on the daily time frame? I think so. And for those of us who have been with me for a while now, the structure here will be a familiar sight, as we've been talking about this since the beginning of this year, this particular same structure. And what we did on the daily time frame was to take into consideration the nature of price action since the month of August of last year. And in fact, you will see that price action has been very bullish. And to emphasize this bullish momentum, we have this ascending trend line identified after connecting the series of higher lows. Now, in addition to this ascending trend line is our key level, which is duly situated at the 1,985 level, as you will see. In fact, this level here had played a major role in determining the direction of price action since the month of July of last year. Look at this closely. You can see how this area was a strong selling niche in the month of July, and during the month of October, though we had some choppy market conditions around here, October, November, it was more of buying and selling, though we saw price break down a little bit. And it's not until the mid-month of November of last year that we saw price break back above the structure, and since that time price action has remained above the 1,985 area, making it a solid and robust demand zone for market participants in this environment. Now, looking at what happened last week following the US CPI data, which saw the US dollar gain some traction despite that strong bearish move, we saw that as soon as price got into the 1,985 level, buy pressure resumed again, and this coincidentally happens simultaneously as the US retail sales data came in beyond expectation, giving some recovery for the gold. Now, moving down into the 4 hours time frame, we have a trading pattern that we will be using to guide our decisions for this week. Now, on the 4 hours time frame, I did consider the nature of price action since the middle of the month of January. So that's an historical data of about 4 to about 6-7 weeks. And one thing you will notice is that price action had consistently found lower lows and lower highs, hereby resulting into a descending channel. Now, connecting the series of lower highs here, we have the resistant line of that descending channel, and connecting the series of lower lows, we have the support line of that descending channel. Now, zooming into this current structure, we saw what happened at the end of last week's trading session, how price action closed exactly at the $2015 area, which beautifully shares a confluence with the $2015 area. Now, look at how important the $2015 area has been since the mid-month of January. It has played a major role in determining the direction of price action. In fact, most of the time, this area has been a strong buying niche, so it has a strong memory for buying power. Now, last week we saw how price broke down that structure with an engulfing bearish candle following the CPI data, which came in unexpectedly higher. And we can see right now, since the new week began, price action just broke out of both the 2015 and the ascending trend and the descending trend line, which is serving as a resistance line of that descending channel. And at this point, the question we want to be asking here is this a true breakout, as price just broke out both the 2015 and that resistance line of the descending channel? Is it going to be a true breakout or a false breakout? Now, there are two ways to which we can know this. If price action drops back down and instead retest the structure, we will be in for an uptrend continuation. And if price action goes ahead to drop below the descending trend line, then this could be another opportunity to sell again. Now, to position ourselves for the next move, we shall be scaling down into the 1 hour time frame just to see how market participants have been reacting to the structure since the new week began. Now, right here on the 1 hour time frame, we have an ascending trend line, which after connecting the series of higher lows since last week Friday, we have the situation marked out here. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying this asset. Now, secondly, price action has broken out of that descending trend line, as you will see here, which of course shares a confluence with the $2015 area. Now, we can see here that the week started on a bullish note, started at around the $2010.50 level right there, and it rose all the way into the $2023 area, where it met a barrier to continue the momentum. And as a result of this, we have a range to work with where price is currently confined within the $2023 area and the $2010.50 level, to emphasize the prevailing uncertainty going on in this market. Now, how are we going to use this structure to position ourselves for the next move? Now, first of all, considering the strong bullish momentum since last week Wednesday, I have a buy stop order above the $2023 area to capitalize on the uptrend move. However, in as much as the possibilities of a breakout of the 2023 level is high, we cannot ignore the potentials that we could see temporary selling pressure bringing price back to retest the structure that was broken. Remember, we saw price broke out of this descending trend line, and from a technical standpoint, we expect that price may come back to retest the structure in an attempt to continue the uptrend move. Now, look at how interestingly this retest may share a confluence with both the ascending trend line, the support line of the range at the $2010.50 level, and of course the descending trend line here. So we have about 3 factors here that could help decide if we are going to be buying from that area. Now, if price comes into the structure, we shall be looking out for patterns and structures that support the idea of buying, like a double bottom structure, head and shoulder pattern, or a falling wedge. And immediately we identify such structure, we mark out the neckline and then buy the breakout of the neckline, and of course had more positions at the breakout of the 2023. So this is how we are going to be managing a bullish expectation in this market today. However, if price action goes ahead to break down both the ascending trend line, the descending trend line, and of course the $2010.50 level, then we have no other choice than to get ready to sell. So we are only selling at the breakdown of that confluence at the $2010.50 area, which of course you can see how both the descending trend line and the ascending trend line merge together. So what if price drops into this area? We need to exercise patience and look out for what the price will transition into. Is it going to transition into a double bottom structure or any form of reversal pattern? If it does, we want to be buying the breakout of the neckline. However, if this area, this confluence is broken to the downside, we want to be selling the XAUUSD. So this is my simple view here. Let's see how far this bearish momentum will go, and that will, depending on how price reacts to the structure here, will determine if we are going to be buying or selling this asset. And if price choose not to drop that far and instead continues to find new high, then a buy stop order above the $2023 area will be all we need to capitalize on that uptrend move. So this is my simple view on the XAUUSD for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. As always, I'll take the next 5 to 10 seconds to see if there are any questions whatsoever before we go ahead to round off on today's Extreme Speed Live technical analysis session. And please don't forget to mark out these levels on your charts accordingly. Hello Destiny One, I see your comments here. You said you don't understand English well, and you said today gold buy or sell. Well, I just explained to you in detail what we are looking out for to either buy or sell. So we don't just think of buying or selling right away. We have to look at how market participants behave and react to particular levels and structures before we make an informed decision. And as a result of this, we had a couple of levels identified on this chart. One of them is this: we are buying only if price action breaks out of the $2023 area. Okay, so we're having a buy stop order above that area to capitalize on an uptrend move. However, if the continuous selling pressure we see here drops in such a way that it brings price into retesting this descending trend line that was broken here, you can see how this trend line and the ascending trend line match together with the support line of that range situated at the $2010.15 area. So okay, so if price drops into this area, into the zone today, we want to exercise patience and see how the market would react to the zone. If we see buy pressure or any form of reversal pattern, so let me just use the double bottom structure for simplicity's sake. And if we see a double bottom structure here, we mark out the neckline of the double bottom structure and of course buy the breakout retest of the 2000 of the neckline of that structure. I don't know if the 2015 will be the neckline anyways, and then we join the momentum to the upside. So we have two perspectives to buying these assets this morning. Now, if instead price drops and breaks down both the 2010 and the $2010 50-cent level, and all of these trend lines here, will have no other choice than to sell below the 2015. So that's what I simply said here. So I hope I made myself very clear here. So we have two factors to guide buying opportunities. That is price breaking above this area, right away we buy above the structure. But if price drops into this area, we look out for reversal patterns to join that uptrend move. But if price breaks down the structures, we are going to be selling this asset today. So that's what I just explained. I hope I made myself clear on that one, Destiny 1. All right, so in the absence of no further questions, I want to assume we are all on the same page, and it's on this note we have come to the end of today's session. And with that being said here, it has been a wonderful moment with you guys. Destiny, you are quite all right. So we have two structures we are looking out for buying opportunities: the 2023 and the $2010 50-cent level, depending on where price action moves. And if price breaks down the $2010 50-cent level, we will be selling below that structure. I hope that's clear. So for today, we were able to attend to 4 of the financial assets on our watch list, which includes the USOILSPOT, the USTech100, USDJPY, and of course the XAUUSD, where we were able to identify simple trading setups that we will be using to position ourselves for the next move. And I do hope you mark out your levels accordingly. If you have done so, well done to you. And all we just want to be doing right now is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. And with this understanding, please let's ensure we have a well-defined risk management strategy in place to mitigate against any risk on our portfolio. And I also want to reiterate again that today being a public holiday in the United States, we might likely be seeing subdued trading activity. So as a result, we may see price action go through a consolidation phase for an extended period of time before a breakout happens. So let's keep this at the back of our mind, as we shouldn't get frustrated if price action is not moving or not gaining traction as expected. So please let's note this at the back of our mind. Now, for those of you who joined us for the first time today, I do hope you were able to gain 1 or 2 things from what we discussed here. If you did so, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So I look forward to seeing more of you. Same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and of course prepare ourselves for tomorrow's trading session. So it's on this note I want to wish us all the best of luck today, and I look forward to seeing you same time tomorrow. Like I said earlier, trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.